Hey everybody, it's Chuck Barone. Thursday, January the 25th, 2024. Interesting day today, guys. Wow, a crazy day in these markets. We'll talk about a lot of this stuff coming up. Before I get rolling though, let me take a half a second. Welcome everybody to the show. And as always, thank you guys for your support. We appreciate you guys showing up every day. Okay, so we knew today was the day. It's the big day. We're going to have the GDP coming out for the fourth quarter, as well as for the year. And we got those numbers. Analysts had expected the fourth quarter to come in at 2%, and for the year around between 1.5% and 1.8%. GDP comes in for the fourth quarter at 3.3%, blowing their estimates away. For the year, finishing at 2.5% for U.S. growth. That's beating 2022, which was up 1.9%. So a couple pretty solid years of growth for the economy, in spite of, right, all the dire warnings, not even warnings, but pretty much the belief. I mean, I know I felt for a while like we were in a recession. Of recession and horrible economic comings. Didn't happen. Grouchy consumers. Everybody kind of pissed because the prices for everything is not what they used to be. Everybody kind of wanting prices to go back down to where they were, which you know is a pipe dream. But anyway, so we know this GDP was coming today, so here's how the markets react. Okay, so first of all, the stock market was probably going to have a good day anyway because earnings coming in pretty strong. Now, if you take healthcare out, they weren't doing so great. Tesla, not so great. Markets had a great day today, man. IBM kicking ass. A lot of companies coming out very positive earnings. So the markets had a good day. Not surprising. The Dow up 242 points. Now over 38,049. The NASDAQ comes up 28 points. Kind of a quiet day for the NASDAQ, but of course that's the Tesla effect there. Up 28 in spite of Tesla. 15,510 on the NASDAQ. And the S&P, fifth day in a row, setting another record, up 25 points today. 4,894 on the S&P 500. So stock market looking great. I was reading this article today. They were saying how consumers and the American public starting to feel a lot better about the economy. Looking at their 401ks and their investment portfolios, even their savings account earning a little bit of money. The price increases, while still prices are still high. Prices not climbing anywhere near as fast as they were. Consumers shrugging off all these rate increases and borrowing money. So, wow, go figure, guys. The economy, on the surface at least, looking good, right? So the bond market reacts like everything was great today. So the bond market, prices rising, yields falling. The 10-year down 5 basis points today, 4.13%. The 2-year down 8 basis points, 4.30%. So now it continues to narrow, the inversion narrowing, now 17 basis points. The lowest I can remember it was 14 last year. I want to say around summertime. And I talked to them about what it's going to look like when it goes back to normal, where short-term rates are lower than long-term rates. And it's going to be fascinating because I really believe that the U.S. Treasury is putting a lot of pressure on this bond market. Everybody's borrowing record numbers right now. And, it's going to be tough to bring rates down as low as they were when you got record levels of borrowing sucking up every single dollar that's investable into debt, securities. So it's going to be fascinating to see how it all plays out. The dollar, with the strong GDP numbers, up today, but not by anything dramatic, up just 14 basis points on the index. 103.48 now on the U.S. dollar. Good solid number. It hasn't really moved very much. Just kind of staying there. Strong dollar. Metals, precious metals, gold and silver today, in spite of a stronger dollar, both rallied up today. We had gold at gaining $6.50, $2,020.90 for an ounce of gold. Silver gains 23 cents, now sitting at $22.88 for an ounce of silver. So prices, I still think silver is behind where it should be. I think gold's pretty much fairly priced right now as far as the market goes, not true value. I think that as the dollar comes down, you're going to see big rallies in both of these. And, you know, the market is what it is. I was happy to see a good, positive day for gold and silver, even with the dollar going up. Oil today, wow, big jump for oil today, up $2.27. Now it's $77.36, so getting above the number we've been expecting between 70 and 75. Now it's broken out above that 75. Actually did yesterday just by a few pennies, but now solidly above that. So let's see if we got the beginning of a new trend here. I gotta say, I seriously doubt it. It's kind of broken out above this. Actually approached $100 one time, you know, last year, and before retreating right back into its comfort zone. So we'll see where it goes. I think that in my mind, there's plenty of oil supply right now. It's winter time. I guess you're going to have higher demand, but you know, there's always going to be demand for energy. So I think that, you know, oil probably, in my estimation, will maybe have a little bit of a rally, especially as the U.S. government goes and refills the petroleum reserves. But I would think gold or oil trending back to its comfort zone between 70 and 75. Bitcoin today, up very small, up $61. $39,912 for Bitcoin, still a good, strong number. I mean, obviously it's sold off quite a bit since these exchanges have opened, but there's reason for Bitcoin holders to feel pretty good about where it is and where it's probably going to go. I think these exchanges in the beginning here, giving an outlet for people to sell, ultimately will be an outlet for people to buy, well, especially once they create a few more products than just straight buying Bitcoin. And they will do that, believe it. All right, so let's talk about news we need to talk about today. So again, we start today with GDP, 3.3% for the fourth quarter, blowing estimates of 2% away. Finishing the year growth 2.5% GDP for the U.S., positive GDP. That beats out 2022's plus 1.9%. So we've had a couple, in spite of everybody feeling like everything's going to hell, the economy has actually held up okay. Now, you know, we've heard millions of dire-ass warnings about, even from me. You know, there was a time last year I believed we were in a recession. You know, when you see those two negative quarters, GDP negative 2 quarters in a row, you're not expecting GDP to rally, right? And it does. So we know that this is a big shock to the market. It's going to certainly be something to give the Fed food for thought. The Fed wants a GDP number. Now, this is what I read today. This is interesting. They feel like 1.8% roughly is the golden number for GDP growth, where it's what they call a neutral number. The economy is not hot enough to cause inflation, but not slow enough to cause recession. So that's the kind of if they have a target, that's that number. That's their ideal number. So I've got to see how the bond market ultimately is going to continue to respond to this. The market surprised me today. I thought for sure you would see rates climbing today, not falling. But, you know, they did. And it's going to be interesting because the market still wants to price in those 6 rate cuts next year. And I got to see, as you see hot economic, data coming in like this, how the bond market's going to hold up. Now, the bond market's been on a super, super, super long bull market. And it's always sad to see a bull die, but I got to say, man, these rates seem lower than they should be. And I still believe that the longer term rates, 10 years and longer, are really going to go up from where they are. Now, you got so many. So listen to this GDP stuff here, okay? They said that the reason GDP growth was what it was. Increased government spending. Of course, consumer spending was the main catalyst by far, because consumers just never did pull in their horns in spite of higher inflation. They continue to spend and borrow and spend. Okay? Plus, low interest rates that saves people a lot of money. People who had rates in the 5s and refied into 3s, that gives them quite a bit of extra spending money, extra disposable income that they're not having to focus on paying that mortgage. So they were saying those were some of the reasons GDP was higher than they thought it was going to be. Today also we got another interesting number. Now this kind of helped balance things out a little bit. We got jobless claims today. Jobless claims jump by 25,000 all the way up to 214,000. Analysts had predicted 200,000. Of course, they miss again. Those guys never seem to get it right. Now this actually, I never like to see jobless claims going up. But if we're going to have a day where we report jobless claims going up, today was a good day for it. Because it kind of balanced things out with this hot GDP number. And I think if the jobs market if this would have beat their estimate, came in 25,000 hotter than they thought it was going to come in, and you couple that with this GDP, it might have been a pretty bad day for the bond market today instead of a little bit of a rally, right? So we'll be watching rates. We're going to watch the bond market a little bit more closely now, especially going into next week, because we're going to have a lot of important data coming then to get a little bit of an idea to see, is it going to go back to a normal and get rid of the inversion? And a whole bunch of other data coming on the bond market. Jobs had a great year in 2023. This is, if this number now and higher, estimates, beating estimates to the wrong side, higher than the estimates are, we'll see if there's a new trend where the market, they've been predicting the labor market's going to slack off for a long time. Maybe this is the start of that trend where it actually happens and becomes more than just a prediction, right? Couple quick tidbits before we wrap up for the day. Did you guys see this Elon Musk thing today? I haven't had a chance to really dig into the details of it, but from when I was watching the Bloomberg this morning, waiting for this GDP info, they were talking about Elon complaining that his equity position, Tesla's earnings came in and were crap. And he's complaining his equity position, he owns 13% of the company, was saying his equity position is not enough. He needs to have around 25% equity position in the company. He was saying it's not economic, of course not, but because he wants to have, managerial blah, 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 blah. So basically what Elon's doing now, kind of the way I understood it, and I need to go confirm this, is basically demanding they create a new class of stock just for him to bring his equity position up to 25%. Diluting the rest of the world, the rest of the Tesla stockholders, they don't have to worry about them, right? And is Elon offering to spend any of his Brazilians of dollars to do this? I don't think I heard that. What I'm guessing is he wants them to just award him a gigantic chunk of stock, more than 10% of the company. So I gotta dig into this. We'll bring some news on this as I find it tomorrow. Also, a couple quick ones. Have you guys seen these new tiny house designs? When it started out, in my mind, I thought it was kind of going to be like living in your lawnmower shed in the backyard. But some of these designs, I got to tell you guys, are looking pretty nice. If I'm a single guy, or I'm a guy who just got married and trying to build some equity somewhere, and I don't want to pay $500,000 to have a regular 3-bedroom, 2-bath house. These are going to be the new starter homes. You're going to see these things start to really gain in popularity. It's going to be, they'll call it a helping solve the homeless problem, but it's not going to. What it's going to be is a place for first-time buyers to get started to building equity. And it's also going to be a place where retirees and single, people who are downsizing can downsize too. And, they're making them attractive enough where there's something people are going to want to do. You get older, having a big house is a lot of maintenance. You got to clean it, you got to maintain it, you got to lawn it, you got to, all the stuff that goes with a house. So a lot of retirees and older people want to downsize and get into stuff that's more manageable. Here's the answer. And if they can bank hundreds of thousands of dollars selling their regular house to get into one of these at a reasonable price, I think you got a winner. So see trends on tiny houses getting bigger and bigger and bigger. Also, lastly, PCE numbers tomorrow. A little bit of the cat out of the bag. I was reading today on Reuters, 2% PCE core rate for the fourth quarter, 1.9% core PCE for the year, I think I saw. We'll have to see what the numbers, they're going to announce everything tomorrow, so it'll be a big hullabaloo. That'll probably be our top story we'll be talking about here tomorrow. So just a little bit of foreshadowing. Anyway, guys, that's it for the day. As always, we appreciate your support. If you could, guys, please hit the like button. It helps our algorithms, helps get the video out in front of a few more people, gets our video seen a few more times. We would appreciate that. Hit me up in the questions and comments, and we'll be back tomorrow to wrap the week up, bring you the news you need. Until then, guys, take care. Thanks.